Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, at present the Australian dollar is still maintaining a slightly bullish stance after advancing before the RBA cut its interest rate from 1.5 to 1.25%. After the cut, the RBA Governor Lowy spoke at a convention and said that they do expect maybe seeing another cut of 25 basis points, which will push the interest rate down to 1%. Therefore, it's highly likely that we will see the Aussie return back to the downside and see the targets to 69.35 as minor and still the objective holding at 68 cents. Now at present, I'm still seeing a view around this level of 69.85 to 70 cents as a potential sell zone. My stop is at 15. I will reassess from there if we do see a break to the upside. It would seem that the market's caught slightly short and no doubt played into the fact that the RBA would go and sell, therefore take steps of selling the Aussie. So this is why the squeeze is on. But this should give good opportunity to shorten the market from here. Overnight, surprisingly, the Fed Jerome Powell has come out and indicated that it's possible that there may be actually an easing coming into play. The dovish comments made overnight did spark the stock market rally hard, and along with that did spark the US dollar to somewhat slip briefly beneath 97. This, on the flip side, saw the euro challenge back at this level of 112.65, and at present was respected, but still poses a slight threat as we are still hugging at this region. I don't expect to see the market break, but keeping these stop losses about 35 points from this level should find that the market should return to the downside, with immediate target looking at 111.85. No real movement in dollar yen overnight, and still at this present stage is holding at 107.85.95 after posting an 87 low, with the geopolitical risks still out there, along with the fact that the uncertainty with Brexit, the uncertainty with the US and China, and also the Iran situation with the US, and also with the tariffs, now also with Trump hitting Mexico with 5%, which takes effect on June the 10th, should keep the yen strength in play. A break beneath 107.85 gives us a target of 106.50. Divergence, as I've been calling it, showing still on the pound, and the bullishness is now seen for the fourth day as we approach the market's taking out 126.60 and looking up towards 127.60 as a target. I am expecting maybe 128.20. Nevertheless, this pattern is still showing potential to the bullish case. Support at this stage is seen around this level at 126 figure 30. We've got a long-legged doji overnight since the gold reached its objective of 1,324. It's slightly questionable what's going to the next direction, but if it is going to be an easing out of the US, then we will see this market move not towards 1,335, but more to the fact of 1,350. Everyone is calling this target, so I'm a little bit skeptical about reaching it. For now, I do expect to see a pullback because we are overbought, so therefore could see a move back towards 1,317. And wrapping up with oil, the market's struggling to rebound, but it hasn't broken 52 yet. If it does break beneath 52, then we are looking back towards $50 a barrel. But the longer we maintain above $52, then it does give us some scope up towards 56. Well, that wraps up for today. Thank you very much for joining me. But as always, look out for the Intraday report, and I hope you enjoy the great start to this new day.